Oops. Thank you, Luke. Oops, didn't want to do that. Trying to get the best thing on YouTube there. I think that's going to be it really. Okay. Yeah, we won't be able to hear you anyway because it's listen only mode, as it were. Choppy day today. We are going to look at real time examples when I've gone through this, guys. So you probably will have questions, but I'll ask when you at certain points if you want to ask questions on what I've just covered. Okay, so a couple more minutes and then we'll get going because it is live. We're going to go through the theory first. It's simple and repeatable. Okay, there's no way to, I would say, change the rules. These are the rules. These are what you should stick to if you want to use the manager. And this manager's been designed around my trading brain, like the expert algo. But the expert algo is to give you signals. This is actually to manage trades. And manage trades, whether you're in expert algo signals, Elliott wave signals, any other signal generator. It doesn't have to be one that we produce. It's good for all of them. So this is why I developed this, so we can have a simple and repeatable way to manage trades, even a swing trade, and we'll look at examples as that as well. And a lot of you that know me for quite a few years now, I'm all about trading behavior, and a lot of this is centered around behavior. Now, before I developed this, I was obviously just got these things on my chart and I could see it because I've been doing it for so long. But to actually visually represent it, this is probably one of the most important indicators you will have, purely because you only make money when you can manage the trades properly. Sometimes if you panic, if you get out early, hi Paul, hi Vic, sorry Vic, Vic, anybody can get into trade, but manage it consistently and trying to get them and maximize the profits every time is very, very difficult. And sometimes we all get out too early. So if you've got a set of rules to follow, and this is what gives you those set of rules and visually represents them, then there's a good chance if you follow this same strategy every single time, you are going to get some great profits in there. So let's get going. We are at hour. So it's called the manager, okay? The boss. Anybody can get you into a trade. Any signal can get you into a trade, but you've got to listen to the manager. And that's why it's called the manager. So every trader can get in a long or a short trade with literally hundreds of different trading indicators. But I would say, and some of you may agree with me that are joining me live, always struggle to, with the trade management to maximize profits consistently. A lot of the time you're kicking yourself because you got out too early. You panicked when it shot down and it was $600 in profit and you got out. And then you go back an hour later, you could have made $1,600. And that's a lot of the time. And one of the most difficult things with retail traders, and that's you guys, okay, is patience. So this takes the patience away from it. This makes the decisions for you. And this combination of things that we talk about now that show you visually on the chart will you know, these have to happen. And if you follow those same rules every time, you'll consistently take the profits in or around the right time. Okay. So let's move on to the next slide. So the manager, it combines price action, different volume behaviors, and especially EMA bias clouds that each, you know, with four different settings to allow for day trading and swing trading strategies, and combining them and spotting a little bit of behavior that we'll talk about in a minute, mainly parabolic moves is one of the main things you need to look for, really. So our algorithm works behind the scenes to display that information on the chart to allow you quick, sensible, and repeatable decisions making, you know, for your managing your trades. So a few simple things to remember. You've got to have the manager running on your chart at all the time. It is not to get in a trade. It is not to confirm a trade. It is to manage the trade once you are in. But if you get if you're scalping on a 1 minute, you've got to have that thing running. You've got to have it on. You selected the correct settings for managing your trade. Managing a trade on the 1 minute time frame is different to on the 15 or the daily, and those settings need to be correct. And we'll go through that. You've got to follow the rules discussed in this presentation to optimize profits of your long and short trades. Okay, don't deviate. I've been doing this for 20 years now. This strategy has now been put on into an indicator to manage your trades. All that experience has been put into this. So this is what you need. Okay. I'm not saying there's something or some of you can't do it better, but the thing is, if you've got a simple set of rules and you follow them all the time, you are going to be consistently profit. No, it will not override it, because this, those were the EMA cloud has nothing to do with this. The cloud that's in here is not the EMA cloud. Okay, it's nothing to do with the EMA cloud, and the volume behavior is only a small part of this. We have different behaviors in there as well, and the way we combine them. Okay, so there's some settings in there. There's not too many, just a few. So this is a screenshot of the trading view version. It's also, obviously, whichever platforms we've got it for, it's the same settings. It just looks a little bit different. At the moment, we've developed for trading view and motive wave. Ninja Trader will be done this week. And then we'll be looking at Think or Swim, TradeStation, and MT4. So we have some settings here. So the day trading moderate is your default setting. So that's when you switch it on, it's already on moderate, and that's what we say is the, you know, your starting point for any sort of day trade, if you like. We also have the day trading aggressive setting. So if you are scalping on the 1 minute or 2 minute, you may want to go straight to that aggressive type of strategy. And then we'll talk about another instance later on when we move from moderate to aggressive, when something happens on the chart, and it's pretty bloody obvious when it does. We've got day trading conservative. So this is probably if you're day trading on the 15 or the 30 minute or the 12 minute, and you want to give the trade a chance for the whole of the trading session, the whole trading day, then you may want to allow things to pull back deeper than what they would normally do. And the conservative strategy, especially if it's just inching up or inching down, depending on the direction of your trade, you might just want to give it a little bit more room, and that day trading conservative is there. And also we have swing trading setting as well for when we're swing trading. We'll go into each one of those, and then we'll go into way to adjust those when you're in a trade and certain things happen. So styling wise, again, it'll look slightly different on each one, but the styling options are still the same. So the volume candle colors are probably don't change them. All I would say is you can do if you wish, but when we teach this volume behavior, we talk about the candles being green and red and gray and cyan. So we don't want to change those, but you can if you wish. you've got the option. So the above average volume, you'll see this on the charts, and it'll be a circle, cyan circle above when it's above average volume. But you can change that to a square, to a triangle, to whatever you want. You can change the color there as well. And then at the moment, the default is blue circle underneath the candle for below average volume. The fast MA and slow MA, you can just change those if you want. But the main thing is for the ribbon, you can change these as well. But for me, the bias is bullish when it's green, it's bearish when it's red. If you want to change the bits on there, if you want to change it to a bright green or a bright red or whatever you want to do, you can change that in there if you wish. So let's get on to some of the things that make up this, and we're going to go through a little bit of theory first. What I want to do first of all is just go through the theory, see what it looks like on the chart, and then I'll ask if you've got any questions. Okay, so average volume. So a lot of people misinterpret or don't understand it, so don't use it. But by knowing the total volume on a candle, you can understand the power of the influence on a given instrument. So if there's more volume going down than there is up for a few candles, then that power is down. Okay, the greater the volume, the greater the influence on the price to change. So if we can then compare each candle's volume over a given period and work out the average volume, so this helps us identify then the momentum when a candle has volume above that average or below that average. So one of the things is, there's some very complicated methods out there to do it, and this particular formula is one of them. Now, we actually use this, but it's all done behind the scenes, and some of the settings are changed because it's automated look back periods. A traditional volume subchart on your chart would look like this. Again, very difficult to spot there. And a lot of those subcharts that you get will have average volume, but they'll be more like a line, like an EMA cloud on there. But that's not quite right. You need to understand the behavior, especially when we talk about this strategy here on a given candle after after an earnings reaction, or we got job openings today. There was no reaction, but if there was, and we didn't know that data was coming, we could spot that with higher than average volume, for example. So we don't need to worry about a subchart because we print it on the chart for you. We don't need to worry about that very complex calculation, because it does it all for you. So what we need to know, the manager, does all that for you and identifies on the chart each candle has higher than average volume or lower than average volume, or in fact, if it's neutral, the same. Also determines the correct look back period for you as well. So depending on the time frame, time of day, it does it all for you. Don't need to worry about it. So let's go back to some of the basics first of understanding volume, because again, we've got average volume now, but we still need to build the picture. And some of you may have seen this theory before, but I don't apologize. It's very, very important. We talk about volume accumulation candles and volume distribution candles. So we're going to go through this. I'm going to look what it looks like on the chart. So this is a volume subchart here. So the accumulation candle is where people amass or accumulate more of a particular instrument, whether it's Ethereum or gold or oil or something like that. So they're basically putting in buy orders, more buy orders than sell orders. So then if an instrument has two or more accumulation candles, then we can say it's looking pretty bullish. Remember, the second accumulation candle has to have more volume than the previous candle that was an accumulation candle. So it's got to increase in volume each time. So if we just look at this on the subchart, we can see this first candle on the left here. The next candle, the volume is higher. So it's this candle that's an accumulation volume. The next one's pretty flat. But then we get another accumulation candle, then another one, then another one. So this basically means that each time period the candle is, so whether it's a 5 minute, a 15, a 60, or a daily candle, each time period has more buyers, more people putting buy orders on than sell orders. So they're accumulating more of a stock, more of a futures contract, more of a Bitcoin or whatever it is. Now, what that looks like on the chart, putting them both together is very, very important to understand how we can manage these trades. So average volume and bullish candles on the manager chart looks like this. So first of all, we can see here where the arrow is, we've got an accumulation candle because it's printed green, okay? But we are, in this instance here, we're below average volume because it's got a blue dot underneath, okay? But it's contracting in price action, but the volumes increases. There's more buyers. And then on the second candle, we can see there's more buyers, but there's even more than the previous candle because that's a green again, and the average volume is higher. So again, we're still contracting in price action. Something's got to give. And the only way is if there's more buyers in the market, the brokers have to put the price up so someone's prepared to sell. At that point, then on the next candle, we have the big price action move. Not only that, it's green, so it's got even more volume than the previous candle, but we're higher than average volume again. And then the next candle, higher than average volume, and it's accumulation candle again. Then we get an up candle, which is a gray candle, but it still has higher than average volume. This is important. That bullish momentum is still there. It's still higher than the average, even though it's lower than that previous candle. Remember, we just have two massive candles there. There's a bit of a breather, but it's actually still higher than average volume. And then we get another one higher than average volume, but it's gray. So the volume's dropping off a little bit on each candle, but we're still above average. Then we get another accumulation candle, okay? Higher than average volume. And then we get that breather again. But after that, the breathers then start to be lower than average volume. So two things are happening here. We're going sideways. We've got lower than average volume, so there's less buyers than before, but there's not a great number of sellers in there either. So we're going sideways. So things to think about here is maybe want to tighten my stop a little bit, or just keep an eye out for a red candle. We'll go through those in a minute. Or this may be, in fact, and we'll go through some examples here, a low volume pullback, which is natural during a trending move. And this is what you're doing. You do, depending on what strategy you've got into this trade, all you can see at the moment is we've still got bullish candles. They're still gray or green, but the lower than average volume, we're going sideways a little bit, and it's on lower than average volume. So we're still pretty safe. We just need to be aware that something could happen. Any questions on the combination of the volume, the accumulation candles, and the higher or lower volume? Any questions on that before we go on? It's good to see a lot of you in here today. I do recognize quite a lot of the names. I may have to get a drink of water at some stage. Okay, no questions. Let's move on. So there's the grey candles, higher than average volume. And there, that lower than average volume, but they're still bullish. So we're just slowing down a little bit. Let's go into that volume distribution. Distribution is giving out, it's dispersing. You're selling the instrument. So you're selling this, there's more sellers of a stock. There's more sellers of gold, for example, in the market, more sellers of Ethereum in the market. So there's more people wanting to sell than there is wanting to buy. Okay. Now, remember, major point to note about distribution days is related to selling an instrument, not buying, which is accumulation. We just did accumulation. This is distribution. It's very important to understand that. The most important piece of the puzzle is when looking at these candles, for a candle to be considered a distribution candle, the candles not only have to end down overall, but they have to have more volume than the previous candle. It's the opposite way around we just talked about. So if an instrument has 2 or more distribution candles, we can say it's looking pretty weak, bearish, okay? The second distribution candle has to have more volume than the previous distribution candle. I keep repeating it, but it's very, very important to understand that momentum. So for a distribution candle to be considered heavy, the volume not only needs to be greater than the previous candle, but the average volume needs to be higher. The volume needs to be higher than the average volume. So also note here, this is the volume subchart. Look how much difference there is for volume for each candle. So things go down faster than they go up. So you will notice these distribution candles have a lot more volume in them. So basically gravity is in effect in all markets, really. Let's see what that looks like here. Just to reiterate, it's pretty obvious. So we've got this candle down on the left. That is, that's this, that has a reasonable amount of volume, but the next candle has way much more volume. Okay, way much more volume. That's distribution. And the next candle has distribution, but then we go low for one candle wonder, just taking a breather, and then we go again and again. So we can see that distribution. There's more sellers in the market. There's more people dumping, if you like, and that's what causes that distribution. So this is what it looks like on a chart, on the Manger chart. Okay, so we've got the average volume. Remember, that's a cyan dot above the candle. We have a distribution candle, which is red, a lower volume here. So let's go through this piece by piece. So we're already in this trade. We've got higher than average volume coming on a distribution candle. The following candle has higher than average volume, and it's a distribution candle again. Momentum's really picking up. The next candle is one of those one candle wonders where it takes a breather. It's higher than average volume, so the momentum's still to the downside, but the volume's probably slightly less than that previous candle. Then the momentum picks up again, higher than average volume. We are then, distribution. Then we have a candle here, a cyan candle, where it's not less or more than average volume. It's actually at average volume. That could be a turning point. In this case, it's a one candle wonder, and we get another higher than average volume distribution candle. Then we get 2 more, but the volume is less each time. And then all of a sudden, you can see down at the bottom here, we get these candles, indecision dojis, mainly low volume. So we got cyan, we got gray, we got one red in there. It does reject those lows on slightly higher volume, but lower than average volume each candle. And then we get we get an accumulation candle, green, remember. So it's higher than that previous one. It's a bullish candle, but look, it's lower than average volume. So I'm not going to panic. At this point, my bias cloud, I'm going to talk about in a minute, is red. So I'm still bearish bias. It's a conservative part of this strategy, but it's still bearish. The bullish candle that I've got is lower than average volume. It could be a one-hit wonder, and that's what we're going to talk about in putting these things together. So combining price action knowledge with these volume aspects, we just discussed with the average, higher than average or lower than average volume, the accumulation distribution is a skill, and it's taught in a separate video. So what we're going to do when we've done the recording for this tutorial, it's going to be on YouTube, we will put in the link in the description of that tutorial, which combines that that price action knowledge with this volume. We're going to see some examples today anyway, but I just want to make that clear there. Okay. So we'll talk about the bias EMA cloud. We're going to go on to some examples soon, so don't worry, don't get bored. We will get there eventually. Yes, you can use the manager along with the expert and the EMA cloud. Remember, the EMA cloud is really, it's sort of, you want to be, if you're going along with an expert signal, you've got to be above the EMA cloud sort of thing. EMA cloud's a very basic way of managing it. This is the, so you imagine EMA cloud is the market standard, if you like, although it's probably better than anything else in the market anyway. But this thing is the platinum standard, okay? This gives you so much more opportunities to maximize profits. So where were we? So the cloud is adjustable with the 4 parameters, those parameters that we discussed earlier. So green is for bullish bias to the current move that we're in. Red is for bearish bias to the current move. So when green changes to red in that bias cloud, this is your conservative exit for a long trade. When the red changes to green, this is your conservative exit for a short trade. So the cloud is advanced ahead of the current candle to help give you plenty of warning. So it's actually advanced 4 candles into the future, okay? We're looking into the future. I know up until now I've said everybody look left. An algorithm can look to the right. So we can advance that 4 candles, okay? You can't look to the right, but an algorithm can take certain parameters and actually print that in the future. Only 4 candles, but it gives you a little bit of extra time for the warnings. We don't want to take it any longer than that because then the accuracy goes a little bit. Okay, next. So the manager. This is the day trading moderate. This is a chart on euro US dollar. Again, some brokers don't give volume for forex. FXCM does. So I just use this as an example, okay, because it's a great example of starting points and then comparing certain things. Okay, so over on the left we can see the bias cloud is red. So we're already in this trade from further up. We can see some big red candles here with a higher than average volume, and then we get a 1 candle bullish here with higher than average volume, and then we get lots of candles, a slightly bearish bias. We can see that as the bias cloud starts to get closer together, but they're lower than average volume. So it's, you know, it's moving slowly. No need to panic. Not even on this green candle here, which comes into that cloud. I mean, the cloud's not there to act as support. It's just a color coding thing. Okay, cheers, Vic. It's a color coding thing, so don't expect the cloud to hold like the EMA cloud does, guys. Okay, the EMA cloud is there for it's a non-linear support and resistance zone. This cloud is to indicate whether we are bearish or bullish. Instead of having it in as a subchart, we've put it in as a cloud on the chart there, so you can see whether it's red or green. Okay, so we get that bullish candle, but it's lower than average volume, but then we get higher than average volume red candle. So that's distribution again, and we start to move down. We're moving down on lower volume. Then we get this 1 candle wonder again. We get an accumulation with higher than average volume. What's going off here? The cloud is still red. We get a green candle with higher than average volume, but then straight away we get red, higher than average volume. Okay, we get a 1 candle wonder with the gray. We get red. The volume's increasing. The average it's higher than average volume. Every single candle starting to come down, and then look at that, boom, and the cloud stays red. Now we get this big parabolic move. So this is a critical choke point here, is we're getting more red candles, more sellers, more distribution of euro US dollar right now with higher than average volume. That's going to come down. The cloud stays red. Then we get this big parabolic move down. Now this is important. The parabolic move is it's not straight down, but it's like 60 degrees. You know, you can tell a parabolic move on a chart. Most of you should. If you can't, stop watching this right now and go and find something else to do, because you shouldn't be trading. Okay. So we get the parabolic move, and then we can see here, we get this pullback, low volume pullback, blue dots, and then we come back down again. And then we're going sideways. We're going sideways with lower volume. Now the EMA cloud changes green. Take a note of this price, guys, 1.17633. I'm going to write it down as well, 1.17633. Okay, so this is the moderate trading, day trading. Okay, so this is when you first start onto this trade, we're not going parabolic, we're just edging down. Okay, but then when we go parabolic, we need to change to aggressive. Okay, now this is the same chart, but with the aggressive setting. Now you can see right at the outset, we're still red on the bias there, but look here, you see how the bias fleetingly changes to green. So if this is on the 5-minute time frame and you're not going parabolic, you need to be on moderate. But then once we start to go parabolic here, then we change to aggressive. There's one thing you've got to do. Go into the settings, get a parabolic move, and a parabolic, I mean, it's pretty bloody obvious. Look at these big candles coming down here. This, compared to this start of this move, is parabolic. We come down, we change it to aggressive. Now we can see the cloud change to green here at 1.17604. 17604. 33 takeaway for 29. Okay, 29 pips more profit, because we spotted that this went parabolic. Now we need to change the setting to day trading aggressive. So again, there's a few things for you to remember, not a lot, but this is a prime example of when we get a parabolic move to change the settings to aggressive to actually get more profit. And this is why it's been designed this way, with the strategy, with me teaching you this, so you can maximize your profits consistently. So when the volume rules trump the bias cloud rules, okay? So aggressive profit taking for potentially violent reversals. So we have that cloud, and that's our go-to to begin with. But the reason why we have those colored candles and those dots up above or below is to understand that behavior. So these potentially violent reversals. So the rules for the bias clouds get trumped when these things happen. And we're going to go through some of those now. They can be on the same chart, yes, as long as you don't color your EMA clouds green or red. That's the only thing. They can be on the same chart, okay? So this is a different example. This is light crude oil, okay? So this is on the 30-minute this time, okay? We have a parabolic move, and we're on the day trading moderate, because that's always our starting point, if you like. We've got the day trading moderate. As we can see here, we have this big parabolic move. You know, 30-minute time frame, you're probably going to let this run overnight, to be honest. You know, it's something you may swing over, especially when you get this move and the cloud's far away, it's nice and fat. When it starts to pull back, it's a low volume pullback. Look at all these blue dots underneath here, low volume pullback. Then we get a parabolic move back down again. We get distribution, 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 all with higher than average volume. But then we get a reversal, okay? So we get this reversal when we get this big green accumulation candle with higher than average volume. Notice the cloud has not turned to green yet. This is a sign to become very, very aggressive and take that profit at that point, okay? Because look at the time of the day. So around about 9:30 in the European morning, a lot of data comes out then. And one of the and we'll go through and remind ourselves of this, but one of the catalysts for a move to reverse, if you like, especially when you're in that trade, is a data point. It's a catalyst that makes it do that. And the reaction to that is increased volume than the previous candle, but also higher than average volume. And that's the time to get out there. Then, for example, we're in a bullish move. We're coming up, then we get higher than average volume distribution candle here. And if you don't spot that first one, you've got to spot the second one. It's telling you to get out aggressively. That's when the cloud changes there. Okay, so these are the time when the cloud rules are trumped. And again, look at the time of this. 15:30, that's when the US stock market opens. Okay, now not all of that time is a catalyst. There was obviously data at that point which made that go down. Okay, there was probably data that came out. It could have been jobs, it could have been anything, but that was the catalyst for that move. Now the catalyst on another day could have made that bullish move continue. Okay, not necessarily, it's not always earnings and data that sends it the opposite way. In fact, sometimes it boosts it and goes the same way. But if it does go the other way, it's confirmed by the manager. Okay. Same chart, day trading aggressive this time. Okay. So even though we're on the 30-minute, you should spot this as parabolic. Okay. It doesn't take the brains of an archbishop to tell you that that is parabolic. We do have low volume coming through here, but we want to hang on to as much profit as we can. The cloud changes at this point here, which is actually lower than what we did before with that that recognition of that accumulation candle with higher than average volume. So in this case, by changing that to aggressive, because we recognize that parabolic would have actually made us more money rather than wait to that. So again, it's that recognition, parabolic or not. It's simple. Okay, let's go on to that bullish move now. So here, even on aggressive, we get this down candle here, okay, with higher than average volume. That's still time to get out. Even with aggressive, the cloud doesn't change until this point here. So there are some cases, even when we are aggressive with that strategy, that we've got to trump that that move with the cloud to say, it's happened, I've got to get out. But the cloud does change a little higher, so you would get more from it. But you've got to recognize those big candles, those big rejections of highs and those big sell-offs with higher than average volume, or the opposite way around if you're going short. So what can we learn from this? And again, you'll be able to go back, pause, watch this again when the recording goes out. It is live on YouTube now, so basically when we finish, it will be there for people to watch. So when day trading and your position has a parabolic move, change the settings to day trading aggressive. Okay, even when it's 5 candles into this parabolic move, it's pretty bloody obvious. Change it. So when short trading, you get an accumulation green candle with a higher than average volume, aggressive profit taking is necessary. Yes, because that would usually be around a data point if that happens. Something's happened to make that reversal. So when long trading, conversely, and you get a distribution candle, red candle with higher than average volume, aggressive profit taking is necessary again. So what about when we're swing trading? What I want to do, swing trading is what's made me my money in my life, okay? And it's very dear to me. Not a lot of people swing trade if they haven't got a great deal of money. They just rely on day trading. But swing trading is very important. And some of the examples we'll do here still would be the same if it was a 5-minute candle, but I just wanted to go through these. So one of the things we always start off on the swing trading setting, okay, as we've got that longer term view on swing trading because we want the instrument, predominantly for me it's stocks, to build momentum over a longer period. So typically when you're swing trading, 4-hour daily and weekly time frame. Now, if you're day trading a 30-minute time frame and the momentum's still going, you can still swing that over to the next day. It's not a problem. But for me, that's root of my success that it's typically given the 4-hour daily and the weekly time frames. We're used, when we're swing trading. So this is a trade I'm in already with the inner circle. So I want to go through a few of the observations here and talk about how the manager has helped trade there and some of the options you could have had during that trade, because it's always about, we can't look right. I can't teach you what's going to happen into the future. I've not got a crystal ball, but what I can do is go back what's happened. I've been there with this stock, so it's a good example to do that. Okay. So first of all, X-Spread Algo signal down in December 2020. Really great signal here on this green candle here. The green candle had lower than average volume down on the left, but it was a good signal candle. Get in, okay, just over $28. Then we get accumulation. Then we start to get higher than average volume here. Really good initial move, impulse move into that swing trade. Okay, so we've got that higher than average volume, great impulse move. We're in the trade, we're in a bit of profit. Now is the time not to panic. So this is on the daily time frame. You've got a lot of time to make decisions here, but look at the volume. It's lower than average volume with price actions very small. We do get what I call a one candle wonder here. We get a big down candle, distribution, higher than average volume. But guess what? We get a bullish Harami form next day with a small gray candle, which has lower than average volume. Look at the cloud, the buyer's cloud. It's still green, okay? We then start to come down with higher than average volume, but it stops. The cloud's still green. Then accumulation, higher than average volume. Slight pullback, lower volume. Then an accumulation. Then we get a massive parabolic move with higher than average volume. We're good. The cloud is getting further and further, it's getting away. It's getting wider and wider. We're getting more bullish sentiment here over that longer term. When we get these pullbacks, it's lower than average volume. So even though we're getting distribution candles here and quite a lot, it's lower than average volume. It's what we call traditional profit taking. Now, this could be on a 5-minute chart on oil futures or ES or whatever. This is on a daily time frame for a stock. It's still the same type of behavior. So it's not to panic is the main thing. Then we get earnings down here. This is a catalyst, as I said. Sometimes data doesn't reverse. It actually gives you a boost in the trade, the direction of your trade. That earnings reaction is a gap up, big green accumulation candle, higher than average volume. And then we go again. Then we get a lower than average volume pullback. Now we're just creeping up with lower than average volume. At this point here, there must have been some news for the stock because we get another boost with accumulation, higher than average volume. Pullback again, lower than average volume. Look how this cloud is moving apart. It's green, it's looking good. Then this is now on to the Elliott waves. The Elliott waves printed a wave 3 at this point. You never know when a wave 3 is going to complete on an Elliott wave. We just know it's the biggest move. It's an impulse move up, and we are looking for signs of weakness. So the first sign of weakness is this distribution candle with higher than average volume. The next candle is lower volume than the previous, but it still has higher than average volume. So we are starting to turn down now. You could see this higher than average volume, 2 down candles as time to take your profit, okay? We then get some blue dots on this little pullback, but then we get distribution again, lower than average volume, but then we get these 2 candles here, distribution with higher than average volume. This is coming down, it's profit taking. If you haven't got Elliott wave, and you can see this is a wave 4, you'd be thinking, I'm going to be aggressive here, I'm going to get out, okay? you're going to take your profit, because if it is a profit taking pullback, I can always get back in again. That's one thing. If you've got the Elliott wave indicator suite, you can see here the cloud is quite thick, it's green. You know, it's going to pull back and probably find support in the green or the amber zone. Looks pretty good. I'm going to hold on to it. In which case, it did hold on to the green zone here in the profit taking pullback zone. And then we had this. So the cloud remains green. So longer term view, stay in. Then we start to move up. We get higher than average volume on this accumulation candle. Then we have earnings and we get a gap up. Okay, so it's now moving again. So if you are a sensible trader and see this move, there's two things you can do, and none of them are wrong. When you see this coming into here, you would take a profit. Wait to see if the wave 4 pullback finds support. If it doesn't fail and it finds support, you could always get back in again. If you're a little bit like me, you see this behavior as natural. It's going to come back into the green zone. I'm going to look to add, and you know, we are in this fifth wave move right now on iron mounting. So again, that's swing trading, and look at those catalysts. They're very, very important. This is a different type of trade. So this is not Elliott wave. This is an impulse move. So daily on a NASDAQ stock again on the swing trading setting. So this example is to show you how to change to a lower setting, like day trading conservative or something like that, to get out there and spotting certain things. So let's go through it. Again, 4, 5, and 6 star buys on the expert algo. You got to go long. You see how we get the cloud, the green bias cloud is getting wider and wider apart. It's really good. Good bullish bias. We get a big move here. Now, this wasn't earnings. This was another piece of data that sent this up, okay? We then continue the move up. Then we get earnings. Just here where this arrow is. We get the gap up. Let's look at that more closely. This candle is very, very important. And this is one of the things we talked about price action here. In the earnings, if we look on the exploded view here, made this candle gap up to this point there. It moved up, but rejected those highs massively and closed below the open with higher than average volume. This is a sign to get out, to take your profits. This is the aggressive exit that I was talking about earlier. So whether this happens on a 1 minute chart, a 3 minute chart, a 15, a 60, a daily, when that happens, we can see there's a catalyst that has made that happen. On another day, it would gap up and run, and with good, we'd stay in the trade. In this case, it gapped up, it tried to move, but then all the sellers came in and sold off, and it closed below the open on higher than average volume. This is a sign to take that aggressive entry and take your profits. If you'd have kept in there, so entry was around about $29. Okay, this exit here was around $68. Great move. Okay, if you'd have kept with the cloud, okay, you would have still taken profit, but at around about $51. So it's still a profitable trade, still a great trade, and you may have wanted just to give that time to see if that pullback would find support. Two options, none of them really wrong, but again, when you've got that catalyst that's happened, and you've got that obvious candlestick pattern, that obvious rejection with a distribution candle and a higher than average volume, you've got to take the profit. For me, that's straight away. Same chart now on the day trading conservative. Okay, so what happens? We get that earnings reaction, and we think it, you know, some of us think that maybe there'll be some profit taking, but it will go back up again. So I'm going to actually just make it a slightly more aggressive strategy with the cloud, and I'm going to adjust it to day trading conservative. So remember, we got in at 29. We could have got out at 68, 69, something like that, with that aggressive, but a slightly more conservative on the cloud would have got us out at, say, $59, something like that. So the cloud just change over at a higher price, and we would still take that. So that's an option. So maybe you don't want to be too aggressive. You've done some research on that particular stock, or there's some more data coming out, if this is a gold or oil or something like that, and you just want to be a little bit more aggressive with that cloud, but not as aggressive of getting out there. So that's that option for you. Now look at what happens if we then change that to day trading moderate, even though we're swing trading. We could have got out, remember, aggressively at 69, but if we change this now, 63, 64 we get out. So there are options for you to say, I didn't get out aggressively, I'm probably going to take it down 2 levels to day trading moderate, and I'm probably going to give it a little bit of time just to see if we run out of juice to the downside and it resumes the main bullish trend. Because you don't know. All this on the right, you don't know what's going to happen. Absolutely not. All we can do is use these tools to maximize our profits. So what can we learn from this again? So when swing trading, we must always look at volume reactions to earnings and other data flashpoints. Okay, so I mean, it could be that the CEO's caught his pants down or anything like that, but there's going to be volume reactions, and that usually comes with a really obvious pattern, candlestick pattern. So we then have options to adjust settings down to day trading settings if we wish, or use that aggressive profit-taking exit strategy. So when we're long, remind you again, if we're long, we want that aggressive exit. When we get that big reaction, that potential of violent reversal, when we're long, we get that red distribution candle, and that will occur with higher than average volume. Then we'll go. So when we're short, it's the opposite way around. Will I get that green accumulation candle occur with higher than average volume? Pretty obvious. Okay, so remember, when day trading or swing trading, there's usually a data or news catalyst that reverses the move. The manager soon spots those with either accumulation distribution candles and combining with higher than average volume, and usually that distinct candlestick formation rejecting those highs or lows. So that is a sign. Now, you can second guess that reaction, but this will tell you what's going off, because it will give you accumulation or distribution, and it'll say whether it's higher than average volume. Believe you me, 9 times out of 10, when there is a violent reaction to data, there is higher than average volume and there is accumulation or distribution cloud, and that usually has that candlestick pattern as well, rejecting the highs or lows. You can't usually see that on lots of different subcharts and all that, so it's too long. If this, as soon as it goes, it tells you what's going off, and that gives you that chance to take your profits more aggressively. So don't second guess when managing your trades. Follow the manager's directions. Imagine that I'm sat next to you giving you directions, because I'm there to help maximize your profits. This has been designed around my trade management brain. So let the manager give you directions. He is, after all, the manager. Okay, let's get rid of that. Right. Any questions on this so far? Come on, there must be some. Whether it's on YouTube, whether it's on Zoom. If you want me to look at a specific instrument, we can do that. I mean, let's look at oil on the 3-minute today. This is an oil trade, 6-star buy here, and the divergence cloud confirmation. So this is our entry at this point here. Okay. Did we panic using the manager coming down? No, we got distribution candles, but they were lower than average volume, and our bias cloud was green. We didn't panic. We didn't take off the trade. We then moved up again. We got accumulation candles, but it was lower than average volume. But hey, it was still going up. We moved back down again, lower than average volume, lower than average volume, average volume. Then we come back up again. And then finally, we get that aggressive exit here, okay? We had this move, higher than average volume, a distribution candle, get out, take your profit, okay? Good move. You see here, this is this in advance telling you here. So I can't play it back on oil, but if we go to, let's go to crypto a second, because I know I can move that back. So I'm going to put this on here. Okay. That's not crypto. Let's go to crypto, spot trading, Ethereum. Okay. Let's look at this 30-minute chart on Ethereum. There's my EMA cloud. I'm going to now put on my the manager, if I can find it. He says, there it is. Okay, so there's the manager. There's my EMA cloud. There's the manager. So we get, let's talk through this. Let's play the trade back. Okay, let's go to the replay mode. They're different, Trevor. They're different EMAs, and it's also on price action. The cloud isn't there. Remember, the EMA cloud, this purple cloud, is non-linear support and resistance. So part of that bundle. If I just take that off a second, this is a bias cloud. So instead of putting a subchart in there, we're telling you whether they're bullish or bearish for this current move. Okay. So let's play this back. Let's go back to this 6-star buy and let's talk through the trade. So I know this is Ethereum, but it could be anything. And to be honest, I love trading crypto at the moment anyway. So let's just play this forward. 6-star buy, okay? I'm looking left. I think I need to be definitely above the signal candle for entry when I get the divergence cloud confirmation. Now this is Ethereum, it could be anything, okay? It could be on any time frame. Let's play this forward. We're still not in this trade yet, guys. We've got no divergence cloud confirmation, so I've got to think, oh no, my entry is going to be here, okay? Let's keep this going. Let's keep this going. Now we get divergence cloud confirmation on here. After that 6-star buy, that's our entry there, okay, above that candle. Simple as that. Let's play this forward now. Okay, so we're not in this trade yet. It's not gone yet. We're getting a low volume pullback, but we're not in this trade, so we're not bothered about what the manager's doing right now. There's my entry, okay? waiting. There's my entry here. Let's just extend this line, okay? I'm not going to cancel my order because most of this downward momentum actually is lower than average volume. But look at this move into this trade here, okay? Higher than average volume accumulation, higher than average volume accumulation, higher than average volume accumulation. Looks good. Now we're starting to move up. Look how the cloud is moving further and further apart. It's green. The price action's great. We're looking good. Whoops. Didn't mean to do that. Sorry, guys. Let's go back to there again. I pressed the wrong button as you do. So let's play this forward, one candle at a time. Right, remember, this is not like the EMA cloud. You're not looking to get out if it goes below. It's about the color of the cloud. The color is green. We're having a low volume pullback against this move so far. Okay, so now we've just breached this pivot here. We're getting higher than average volume accumulation candles. We're looking good. If you're one of those like me that likes to go risk-free, now I've had a pullback here that hasn't tested the entry and I've breached this pivot, that's where I'd be risk-free. That's where my trading stop would be, because to be honest, that's my first priority. Now I just let the manager run. I'm risk-free. If I have to go to the bathroom, and I'm fine. So the stop loss would go risk-free now. Okay. Now you've got to manage this trade with the manager. You're risk-free. Let it tell you what to do. Let's play this forward. Okay. Oh, this is looking good now, isn't it, guys? Okay. We see we get this low than average volume come back. We then get these accumulation candles, but the low than average volume. Then we get this massive move up, higher than average, higher than average, higher than average. We're getting accumulations in there as well. This is looking good. Whoa, then what happens here? We have higher than average distribution candle. We are set on day trading moderate. Would you say, guys, let's do a thing. Would you say this move just here is parabolic? Answers, please, yes or no. Compared to this previous move here, this one here, is this parabolic? Yes, it is. Let's change it to day trading aggressive. Okay. So if we don't want to take our profit here, which is a lot of money, at that close, that is an 8.63% move. Okay. About, that's a big move. So 8.63%. Now, I've decided I like Ethereum. I've gone aggressive on my cloud. I'm going to give this a chance. I don't know what's going to happen, right? Okay, I've not been watching Ethereum recently, but this could be a one candle wonder. Let's just play it out. I've gone aggressive. Whoa, now we get another one here. We get a high volume distribution candle coming here. Cloud's not changed yet. What happens next? Now, whoa, it doesn't change. The candle doesn't, the cloud doesn't change. The candle close, it doesn't change. Oh my Lord. Now it's changed just here. Okay. So this one is at this point here, you see how in advance that's changed. That's a 7.41. So you wouldn't have your stop. Billy, you wouldn't change your stop from break even. You're using this to get out of the trade. So no wrong answer here. Who would have taken the aggressive move with that first higher than average volume distribution candle? No right or wrong answer here. Okay, who would have taken that? Okay, you wouldn't have taken that. I wouldn't have taken that because I could see some real good bullish momentum here. But what I did was changed the settings to aggressive, because if it did continue to go down, I wanted to make sure I got enough profits in here. Okay, this is on the 30-minute, don't forget. Okay, So eventually when that does change, I'm going to make 7.41 against 8 point something percent. So not a great deal of difference there. But what that's done is allowed me to give it a bit of room. Give it a room. Let's play it forward, see what happens in the end. Okay, in the end, it continued to go up. Now, what happened if we left that at moderate? Again, you need to understand a little bit about the instrument you're trading. Moderate. Is that right? Yeah. Look at that. The cloud doesn't even change, guys. So this is starting to make you think now. Parabolic move, but I know this instrument's really bullish. Do I go aggressive? Yeah. That red candle was a one candle wonder. That red candle was a one candle wonder. So by not, I mean, I would have personally gone aggressive at that point because I don't know what's going right. I would have taken the profit. But all of a sudden now, when I'm learning about Ethereum moves and they're going long and I'm using the manager, I'm thinking, do you know what? Actually, I might just leave that at moderate because I've just gone through this. And this is going to be in my mind next time Ethereum moves and I'm in a trade, a spot trade, that I'm going to leave it on moderate. I'm not going to be overreactive to these one candle wonders because if they're followed by another candle that's not a down candle, not another red candle, it's most likely going to go back up again. So again, what we do here on this candle here, this is rejection of the highs on higher than average volume, and it is distribution. So there's another opportunity to take profit at that point. That's a 10.64%. We can say, and again, we can say, if this is actually forming some resistance now, is it worth me staying in? Those questions you see, but what you're seeing is this is giving you options. Now, what I would say is if you're trading Ethereum, decide on the type of strategy you're going to use. How are you going to combine those? Are you going to go aggressive with these higher than average volumes and distribution candles? For example, if you're going long, are you just going to stick to the moderate cloud? If you decide on what you want to do, continue to do that. If you then over the first month see that you actually, by not being aggressive on these, you could have made more money, change it. But don't change it from one to the other, from one day to the other. You have to let it run. You will always maximize your profits using the manager, but you can refine that by learning and understanding what you've been doing over the last month. Don't do it day by day because then you're second guessing. The whole idea of this is not to second guess and to use that same strategy. You see the resistance hold again, okay? And again, oh Lord, now look what happened, okay? Trying to be too greedy, trying to leave it longer than ever. That's when the red candle goes down. I'm going to show you something here. Okay, it changes here. One, so you would have taken profit there. 8.21%. The previous day, you could have taken the same profit when that candle had the aggressive move. You see how cool that is? Okay. All this heartache here could have been saved if you'd gone out on that aggressive move. Or if it attempted it the second time, attempted it the third time. Then you got another red candle with higher than average volume. Get out. You can't push through. Hopefully you can understand how that moves. Let's just go all the way to the end. Then we get another 6-star buy recently. We get in this trade. Right now, we're still in the Ethereum long. There's no reason for us to get out, okay? This higher than average volume distribution was followed by a higher than average volume accumulation. So they sort of cancel each other out. Then we've got this movement where we are right now. Okay, so let's go to a stock, okay? So let's go to PKI. I'm in this with the inner circle and we're on a weekly time frame with this. We've gone through the fifth wave move where, you know, one of the inner circle took profit at the target For me, I can see on the weekly, we are getting some accumulation candles. So we go down to the daily to manage this now. Here's the manager. This, we entered this trade around about 143.22. I've got my trailing stop underneath here just to lock a bit of profit in, but now we've gone parabolic. At the moment, you can see I'm on day trading conservative. Okay, I'm not on swing trading anymore. So this trade was started on the weekly way back in May. It's gone through the fifth wave target zone, both on the weekly and the daily. I'm waiting for a pullback. So what I've decided to do is I've moved the setting to day trading conservative. If you see where the green cloud is now, how wide that is, if you go to swing trading, you can see it's a lot wider. It's going to take a lot longer to react to turn to red. So what I've done is change that to day trading conservative, and that's how I'm going to manage the trade. Right now, we've topped off. We've had a great parabolic move, which has made me change that to day trading moderate. Now, what we've got to do, we can see this pullback. These last 3 days have been lower than average volume. So if we are going to get a pullback and that average volume doesn't pick up, I can expect a little ABC correction, and I will stay in this trade as long as the cloud remains green. That's what I want to do. Okay. IRM, we talked about that earlier. This is what it looks like from this fifth wave trade right now. Great rejection of those lows on this accumulation candle, higher than average volume. We had average volume yesterday, freakily enough. Today, despite some of the futures being quite negative and flat, this is having a reasonably good day after the gap down. Hopefully we'll be closing higher than yesterday's close. It is lower than average volume though, but I am looking at this cloud still remaining green. But again, this is not parabolic, so I would change that to swing trading. Look how fat and wide that green cloud is there. Okay, so again, depends on the move. This move is not parabolic yet. I think I'd need another higher high, higher low tomorrow to confirm that and test this wave 3. So right now that would remain on there. Let's have a look at some of the others. MDB. So MDB, it is a fifth wave move. It's on the daily. I've just got to change the bar count number there. 5895. So what's happened here? Simples. Okay, we had a wave 4 pullback. I did the traditional entry. I went in, I went a little bit above the 6-4 moving average high just here, but then we got a 5, we got a 6-star buy. We're getting higher than average volume moves up here. The cloud is still green on the day trading, on the swing trading. It's not really parabolic yet, and we're coming up to this previous high, so it may test and come back down again. So this is another swing trade I'm in with the other circle. So we're giving it time. Okay. My bias cloud is still green on the manager. I've got higher than average volume moves up here, pretty good. I've got a 6-star buy. Everything looks pretty good to me. Okay, so any questions? Anybody want me to look at a specific instrument using the manager tool on a specific time frame or something like that? So just fire it at me, then we have a look. We've got probably 5 minutes or so left before I finish, because it is 7:45 p.m. here in Europe, and I am hungry. So come on, give me an instrument, any instrument, doesn't matter. I can guarantee this works. Obviously, I can only show you XPRAT, Elliott wave, harmonic type signals. BTC USDT. Okay, so let's go here. Oh no, I think I've got that actually on the watch list here. BTC USDT. Any specific time frame, Eric? Is there a time frame you like to trade on BTC USDT? I've done well not drinking water actually. 4 hour. Okay, there we go. So do I put Elliott wave on there? I don't think I've got it on there, but I can put it on because we probably want to use Elliott wave on a 4 hour chart. So bear with me. Let's just put that down there. I want to see where this current trend gives us. So that, I need the bar count. Bear with me, Eric. Sorry, I need the bar number. Move that down a little bit. Get rid of that. So that bar number here is 2894. I just want to see where we are on the trend. Okay, it's a larger time frame. Okay, that's where we are. Okay, excuse me. Okay, so 6-star buy here for the expat. There's no Elliott wave signal there. They could be harmonics, but I don't think I've got. I've got harmonics there. There's no harmonic trade here. So we got. I mean, again, depending on what strategy you are using. You know, there are signals probably coming down here, and this is a great. I mean, look at these accumulation candles. Even these grey candles up higher than average volume, higher than average volume. We pull back lower than average volume, then we pull back up again, moving. Now, this is where that one candle wonder comes in. We get a down candle distribution, higher than average volume, but the rejection. If I just take the Elliott wave off a second, you might be able to see that a little closer. That rejection is probably what, 50% rejection there of those lows on higher volume, higher than average volume. It's going to turn back up again. Next candle, it's a down candle, but lower the volume than the previous one, and it's lower than average volume. Then we get that consolidation with an accumulation candle, lower than average volume, boom, pushes up again. Now, this is the time, distribution, distribution. It does reject, but I've got 3 on the trot there. I get out and take the profit. Okay, no ifs, no buts. I'm out, and I wait for another signal. And right now, if you are long in this trade, you see how this pullback had lower than average volume. Now we're coming back up again with higher than average volume. So right now, this is still looking very, very strong. Yeah, very, very strong. Does that help, Eric? Okay, so we're going to go NQ 15 minutes, and I'll work through the list, guys, so don't worry. Maybe it's going to take more than 5 minutes. NQ 15 minutes. Ooh, it's been scrappy today. To be honest, I wouldn't have traded it today with Jolt's job openings anyway. But again, you can see here maximizing profits on this bearish move. Fantastic moves here, really great. Let's talk about this bearish move. Actually, we did get an accumulation candle here with higher than average volume, but look, it rejected a 618 retracement there, a sign that's going to continue to go down. Then higher than average volume continued with down candles, then a big distribution candle with higher than average volume. When we come back up, lower than average volume, lower than average volume, then boom again. Then we get lower than average volume move up, and the cloud changes. That's when to take the profit there. On the bullish move, we get great moves up here, a lot higher than average volume. Cloud changes just here, but to be honest, I'd have been out before Jolt's job openings, which was there. That is the NQ 15 minutes. Uh, 3 minutes silver. Okay, I love trading silver. $25 a tick. It's fantastic. Okay. Oh, blimey. Yesterday, 6-star sell. I'd have only been out of it today here. Okay. That is a massive move here. 6-star sell, entry is there, and I'm out as that closes there today. 605 ticks. Anybody do any mental arithmetic here? 605 times 25. It's $25 a tick. That would make your month, would it not? So now, obviously, if you're in a long, that's where you would go as well. So silver, that's the trade of the bloody year. That is $15,000 on a 3-minute chart. Okay. Anyway, we are got to look at, so we've done silver, oil on the 10 minutes. Okay, so oil on the 10-minute loop, 4 contracts, that's $60,000 there, Daniel, on silver. So Luke, you took a trade today on the 10 minutes. Or yesterday on the 10 minutes. That was probably the 6-star sell with that entry there, just below that pivot. So 6-star sell on oil there. Again, we pull back against there. Whoa, what are we on? Are we on moderate? No, we're on aggressive. Hang on. We start on moderate. Okay. So we get the 6-star sell. We go sideways on low volume. Then we have the parabolic move on high volume, higher than average volume, distribution candles. Then we start to come back up. This is the example I gave you earlier. This is the time to get out here. So that move, that trade was 212 ticks. So $2,120 per one contract there on oil. Okay, there was no long trades there today on the 10 minute. Again, if you'd have seen that parabolic move, so $2,210, remember that. But this parabolic move would say, hey, guess what? I'm going aggressive on here. And then your profit would have been two. So we got there. We got that change. So we go back 4 candles. About there. So $2,270. You'd have made a, by going aggressive, an extra $100 and something there, Luke. Okay. But that's what oil looks like on the 10-minute, Luke, and hopefully, if you traded it today, I don't see a signal there. Maybe you took another signal, maybe opening range play or something like that. You know, this pullback. Let's go back to moderate again. Sorry, always start on the moderate. Okay, if you went long today, you'd still be long right now. Okay, cloud didn't change. Pullback, even if you went in on the opening range play, the pullback here was high volume, but the cloud remained green. Then we had some support. Then we had a massive candle, high volume, higher than average volume, and then we're green still. My only concern with this trade is we've got some big resistance here, but you should still be in it anyway. So the last one was gold on the 3 minutes. Interesting. Wow. Okay. Let's look at this. This is interesting here. 6-star sell today on the 3 minute. That's your candle. To be honest, conservative entry needs to be under there. That's just my thing. Want to make sure we're on moderate. Right. Here's another thing. This is a good teaching point. if you're going for a very, very conservative entry for this 6-star sell, go conservative on your manager. Okay, why? Because you're not going to the normal entry here. You're not going in at 1744. You're going in at 1740. That's a lot of points, to be honest. I don't think that would have been a great. The trade here would have been the sensible one. But it goes to show, if you've gone on the conservative entry here, the pullback comes up. We do get one candle, aggressive, high volume, higher than average volume, but the cloud is red. We're going sideways on low volume. We get high volume, one candle wonder, higher than average volume, distribution, one candle wonder, and we start to move back again. Pulls back up, lower than average volume. Don't panic. Do not panic. Blue circles, don't panic. Cloud is still red. Comes back down again. Now we're getting close to actually taking this profit. Look how close that cloud is. Okay, we have not had any real big accumulation candles with higher than average volume. So we've got to, again, not panic right now. This is out for candles. Right now, this is in great profit. This candle has just changed again. I reckon on the next candle, if we get higher, if we get a higher high, higher low, this will change to green, and that would be the time to take that profit there. So even on a conservative entry and a conservative manager, you're looking at 100 ticks, $1,000 per one contract. Very, very simple. Okay. It's about not panicking, even though this starts to come up here. There's no, when we saw it on the example, this could turn back down again right now, and that cloud still remain red. We don't know. We can't look right. We've just got some very great and cool rules to help us trade and manage these trades. Okay. Right, guys, I'm going to go. It's now nearly 8 p.m. So we've done an hour and a half on this manager, and hopefully it has been helpful for you. You're welcome. I'm just going to put the link in the chats here to the manager. Again, it will be available for all platforms, but it's only available for TradingView and Motive Wave right now. But we will, and right now, instead of $499, and you'll say, oh, that's expensive to manage in trades. That's more important than any signal generator than you get, because you need to maximize profits. Okay, so at the moment it's only $399 for the first 50 sales. Okay, once those 50 sales have gone, tough, it's going at $499. It's staying there because it's one of the most important indicators you will ever get. Okay, so I'm just going to put that in the chat on YouTube as well. Okay, we just had an order. Well done. He's just placed, someone's just placed an order for Motive Wave, Sri Drama. Okay, thank you very much. Damien will sort that out for you, don't worry. Okay, so great being with you guys. Really enjoyed this. I've been working on this a long time, and I'm glad it's finally out, because any monkey can get in a trade long or short, but it takes real skill to manage the trade to maximize profits. This will do it for you. It will help you listen to the manager, and be patient. Okay. Cheers, everybody. Speak to you all soon.